Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so you can do some easy math. If you have a question or stock you want to go over together live, leave it in the comment section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, let's look at our open positions. First up, have queued for tomorrow a T-bill auction. You can just ignore that. We're trying to roll our XBI short call spread from February to March. Bids at 47, trying to get to zero. So no credit to roll it and no debit to roll it. So that's going to be tough. We've got 2 days till expiration. Hang on tight. Palantir trying to get to 12. Marks at 27. Pretty much flat on that one. Our short put on CCJ down 62 bucks, up slightly today, but we've got some time on that one. And then our short call spread for March on the semiconductor ETF. Got some work to do. I think it's right at our short call strike at 200, okay? We'll check on that one maybe later today during the show. Let's first up go over our short call spread on EFA closed yesterday after the show. So we opened it, I don't know, I think either, we opened it on the 25th, I believe, a short call spread. We sold the 77 and bought the 79. It filled yesterday after the show. So we made $21 and it was a $200 spread. So 21 divided by 200. Is that right? 10%? Maybe. Yeah, okay. We made money regardless, whatever the amount was. So we sold the 77 right about here and bought the 79, which is way up here. So that was a good trade. In and out over the course of, 2 weeks or so? Not bad. All right, let's look for new opportunities today. First up will be Lyft. Post earnings, up big. I think they were up even bigger because of a typo on their earnings release. So it's up 37% right now. Let's take a look. Tomorrow, this blue line is going to be up higher. IV rank of 156, maybe. If we want to sell the call side, we have resistance at right here at 1670, which it just hit this morning. Next up resistance will be at 2140. Okay, so if we want to sell the call side, preferably move past 2140. We're still opening March positions until probably sometime next week. Call side, you'd want to sell the 20. So if you sold the 20 and bought the 22, what's the math on that one? 37 minus 16 divided by 2 divided by 200. 5% there. Put side, you'd have to sell at 13. A lot of volume at the 12. But you'd have to sell 13 and buy 11. You're not going to get paid for it. 20 on the chart for the call side. Up here. That seems fair, considering there's only 30 days till expiration. Let's wait a day or two, see if we get any upgrades or price target adjustments over the next 2 days. And then if it keeps moving up, we'll sell the call side. Okay? I'll put a mark here, Lyft. Robinhood. HOOD. We don't check this one very often. Up 10%. Earnings move as well. Gap up and selling off. This one's been range bound since end of 21, early 22. We do have resistance at 14, 15-ish from back here in 2022. I know, this one's a tough one. Call side, you'd have to sell the 16 and buy the 17. Seems like a waste of time there. Put side, you've got reds on the put side for obvious reasons. You got red mostly on the call side. I think this one is just a post earnings suck out of premium. Let's keep going. Uber. Uber up 11%. Post earnings as well. I think they announced some buybacks. Buyback for the first time ever. Here's your chart. I mean, Uber versus Lyft. I'd rather do play Uber. Big run up here since the end of October. And we're at an all-time high. So no chart work we can do. Call side, you'd have to sell the 85 and buy the 90. We'll do the math there. 85 is 69 minus 24 divided by 2 divided by 500, 4.5%. Not that great. Put side, you'd have to sell 70 and buy 65. 69 minus 19 divided by 2 divided by 500. That's 5% right on the nose. It's kind of like the bare minimum we're looking for. Selling the 70 right out. Where's 70? Oh no. 70's right here. That's way too close. Skip the put side. The call side, 85. 85 is right here. That seems too close as well. Let's skip Uber. Next up, Shopify, SHOP. This is day 2 after earnings. Today's the 14th. Happy Valentine's Day, by the way. Price target to 68. Equal weight. Barclays, RBC. Outperform. Wedbush raises to 75. Underweight at Piper Sandler. So kind of all over the place for Spotify. If you want to sell the put side, yesterday was your day. Call side, you'd have to sell 90 and buy 95. Liquidity's okay on this one. 122 minus 66 divided by 2 divided by 500. 5.5. Okay. Skip the put side. You would have had sold it yesterday. Next up, HP. What did they get? An upgrade maybe? They were in the news this morning for something. It's not showing it here. Earnings aren't until April 24th. Some volatility after earnings. Let's take a look. We're higher than normal. As far as liquidity goes, not that great. Put side, you'd have to sell the 32.5, and there's zero volume. Zero volume on the call side. Let's move on. Airbnb. Up next. I think this is post earnings. Earnings were yesterday after the close. So down 4%. That's not bad. Cut to neutral by Davidson. Raise the price target from Wedbush to 160. That seems fair. Nothing out of the normal here. All right, here's our chart. Since 2020, it's gone nowhere. Literally gone nowhere. You can make a case for selling the put side. You'd have to sell the 130. Liquidity's not the best. We got a 17-cent spread at the 130. And going out to the 125 is too far out where you don't get paid for it. And even though it's down 4% today, the move wasn't more so than was priced in the options market. We got red on the put side and red on the call side. So that means they were pricing in a bigger move for earnings, which it didn't make. So red on both sides. We want green on one of these sides. Let's move on. Barrick Gold earnings. Looks like it didn't move as much either today before the open. There'll probably be nothing here as well. Although the put side looks interesting. Still shows higher than normal. The put side, you'd have to sell. The 13's a little too close. Let's look at Newmont really quick. NEM. Their earnings are the 22nd, so we're too close to earnings. I'll wait for Newmont. Newmont's a better play when it comes to gold. Next up, Kraft Heinz KHC. Post earnings down big today, down 5%. An okay quarter, it wasn't that bad. Let's take a look. We have momentum to the downside. We have double top back here in 21 and 22, and then now lower highs coming down and then lower lows. So I don't know if you'd want to sell the put side here. It's just hanging out in the middle, and it's now below the 200-day moving average. For March, you would need to sell the 30, and you get a whopping $5. Skip both the put and the call side. Next up, Upstart, UPST. Holy moly, down 20%. This is earnings. Piper Sandler adjusts to 28. Keeps neutral. All right. Let's check it out. I traded Upstart before. Traded it back in August or September, I believe. If you want to sell the put side, could catch a bounce here for sure in November of 23. Put side's interesting here, but make it a put spread. I don't like this one. You'd want to sell 20 and buy 15. Let's do the math. Good liquidity here too. $46 minus 7 divided by 2 divided by 500, 4%. If you want to sell the 20 right out, $2,000 cash secured. I don't know if I'd want to do that. I'd rather sell the put spread on Upstart than the put right out. But if you like this stock, go ahead. Call side. You'd have to sell the 35 and buy the 40. 70 minus 34 divided by 2 divided by 500, 3.6% there too. So not much to do here after earnings. Let's wait to see if there's upgrades or downgrades. If anything, obviously downgrades to bring this down even more. If it can get some downgrades and move down closer to 22, we could talk about selling a put spread then. Okay? Close but no cigar. Citi, my least favorite bank. I think there's a positive note today. There was a positive note about Citi out of somewhere. It's up 2.5% because of it. Call side, you'd have to sell the 57.5 and buy the 60. Liquidity's good. We don't have to worry about earnings till April. I don't really think you get paid for it though. 41 minus 12 divided by 2 divided by 250. Actually, you do 6% there. Granted, the 57.5 is a little close. 57.50 is right here. Yeah, that's a little close for comfort. But you get paid for it. And I want to pass on the put side. Put side, you need to sell 50. You only get 30 bucks. Skip it. Next. MGM, post earnings, down 7.5%. Yeeks. Overweight at Barclays maintained. Okay, it's hitting the 200-day. May get a bounce here, if not a lot of support at 40.85, 41-ish. And the next stop down is at 38. So keep those numbers in mind if you want to sell the put side. Kind of got a head and shoulders going on here. Shoulder, head, shoulders, if you believe those chart patterns. I don't. Let's take a look at the put side. You'd want to sell the 38. You don't really get paid for it. Selling the 38 makes sense. That's the second spot for a bounce. $38 is here. That seems very fair. I gotta hold on this one. Last time for earnings, they'd gap down and it kept running down. Same thing, you want to wait for there to be a bigger move down, then sell the put side. Even though it's down 7.5% and hitting the 200-day, you'd rather have a big move down, then sell the put side, say around, I don't know, 37 or so. Well, a little early to sell the put side, and you don't want to sell the call side at this point. So, really quick, let's look at Win. Is there any ping action on Win? No. Let's say if Win was down today, sell puts on Win, but there's not. Next up, Instacart, Maple Bear, 7% down today. Post earnings move as well. However, not really going anywhere. Here's your chart, kind of a nothing burger. Put side, we got some action here at the 20, but a little liquidity's not great. We got a 25-40 spread. That's no good. Call side, same thing. You'd want to sell the 32. 15-cent spread here. Let's skip it. Disney. Was Disney in the news? I don't remember the Disney news this morning, but we're past earnings. Big jump up. Hasn't pulled back yet. Hitting resistance from back, I don't know, in August of 2022. Let's see if it's too late to sell the call side. It may be. Call side, you need to sell 120. You get 62 bucks for it. I think the move for Disney's over. Next up, Walmart. Walmart was in the news for where they want to buy Vizio. Walmart reportedly in talks to acquire Vizio for more than $2 billion. Interesting. Outperform. Maintain at 185. That's fair. Their earnings are on the 20th. So that's, what, a week away? We're going to have to wait till after earnings, and then we'll see if we can do something with Walmart. Best case scenario, post-earnings Walmart, big gap down to like the 200-day, say to 158. Then we'll sell a ton of puts on Walmart. That's the move to make. Right now, you got to hold on. Right now, you'd have to sell the 155. 155 is way down here. That makes sense. That's a big move. I can't remember. Maybe last time we did sell puts on Walmart post earnings in November. I'd have to go back and check. But that would be the move. Just like this last time. Big gap down, sell puts that day, and wait for it to move back up. Sort of like what we did with Google a week or two ago. Okay. Next up, Ulta. What was the news on Ulta? A downgrade from Loop. This one may be too big. And it looks like they may have earnings coming up too. Earnings, sorry, I forgot to look. Earnings are March 14th, so exactly a month away. We're kind of on that borderline of what to do. Put side, you'd have to sell the 475. There's no volume. Too illiquid. Let's move on. Target, TGT. A choppy setup. Earnings are March 5th, a little less than a month away. There was some news out of Target. I can't remember what it was. But we are kind of at the point where it's too close to earnings to do anything. Earnings are this week for March 8th expiration, and then March, the monthly, is the week after. So we're a little too close to do anything, because if we get into a pickle, it'll be hard to do stuff. We'll only have a week to adjust. Put side, you'd have to sell the 130. Great liquidity. There is some volatility priced into this one too. 8-cent spread here on the 130. It's a little close, but it's not bad. 130 is like right at the 200 day. This seems fair. But you'd be holding through earnings. All right. Pass. DVA. Up 7%. Oh, yeah, this is post earnings. I think this one's too illiquid, though. Yeah, too illiquid. Sorry, my bad. Shouldn't have included that one. Let's follow up with Tesla. Interesting. Post earnings gap down has just gone sideways. AKA asks, why don't you trade close to earnings? Isn't increasing as you get closer to the date? I think you mean isn't volatility increasing? So yeah, I've done earning trades before. Hold on, let me take a drink. I've done earning trades before. I think the last one I did was JP Morgan right before the quarter. We sold the call spread just because JP Morgan moved so much up into the quarter and it was priced to perfection, so that even though it did gap up, it sold off afterwards. Let's take a look at JP Morgan really quick. JPM. So we had such a big move up into the quarter, and then we sold a... Hold on. Yes, sorry. So we sold JP Morgan a call spread on the day before, on January 11th, and it did go against us, I guess you could say, and open up, and then it sold off that very day and closed. So you can, and I've done it before, selling before options because everything is priced in. What will happen is if it moves more so than that's priced into the options market, your strike could be in the money the very next day. And like the one we just looked at, what was it, Target? The expiration was the week after their earnings, so you'd have a week to kind of adjust, and that can be tricky too, especially if things move against you. We held Roku through earnings. Was that right? Blah. Okay, so we sold a call spread in Roku back in, I can't remember, at some point. It was this one. Back, one of these, we sold a call spread in Roku. No, wait a second. My bad. We sold a put spread on Roku and it moved against us. Our strikes were in the money and it moved up. So this day on November 2nd, we got out of the trade. It's a binary move. So had Roku gone down after earnings, it would have been in really deep trouble then. So when you have binary moves like that, it's hard to adjust if you get into trouble. Like I said, if this Roku trade, if Roku reported bad earnings and it went down, we'd have to play a lot of catch up. We'd have to try rolling. If you can't roll, then you'd either have to close and take a big loss or get the shares. And once you get the shares, you'd have to, well, getting assigned shares sucks up a lot of capital, first of all. And then you just have to kind of play a game. It's a waiting game then. So the answer is yes, you can sell before earnings. I've done it. I don't like to because I like to sleep at night. And it also depends on the stock. Like if Walmart was going down into the quarter like a lot, I would sell some puts, just one obviously. I would sell one put going into a very downward chart going into Walmart. Okay, hope that helps. Good question, AKA. Let's take a look at Walmart really quick. So say going to earnings, Walmart has some crazy sell-off down to say like 155. I was considering selling one put. Yeah, you're holding the bag. So when you're selling options, you wanna just have a slow bleed, okay? Okay, good question. Moving on. Tesla, we're skipping Pepsi. I think we're taking Pepsi off the list. It's not going to... It's getting there. I was looking at 166 for Pepsi. Or was it 164? Yeah, 164 I was waiting for. Not there yet. Volatility-wise, it's okay. No. I'm going to take Pepsi off this list. We're not going to follow up with Pepsi anymore. It didn't move after earnings as much as I'd wanted. IWM was looking at for 210. Let's check that one out. It's getting there. Kind of just hanging out here. If IWM can move up to 210, I'm going to sell a call spread. Hold on for that one. ARM? This one's been fun. Very interesting to watch ARM. Up again today, but selling off. Post earnings, so we don't have to worry about earnings anymore. Call side, let's take a look really quick here. Still heightened volatility across the curve. Call side, you'd have to go all the way out to the 180. A lot of volume at the 185. You could do that. You can pick any strike anywhere from 180 to sell to the 210 to sell. Liquidity's okay though, just because this is so inflated. These are really expensive, and just because this is so inflated, wow, crazy. Sorry, just because it's so inflated makes liquidity a little bit harder. Expensive here. A lot of open interest at the 180 and the 185, and that makes sense. This is all institutional selling. And all retail is buying. We want to do what institutions are doing, selling. You'd want to sell the 180 or sell the 185 and then buy coverage, $500 spread. If you sold the 185 and bought the 190, what do you got? 185, that's 655 minus 612 divided by 2 divided by 500, only 4.3%. Institutions are probably just selling the calls naked. All the way from 175 to 185. Don't sell it naked. Put side. Look at the open interest at the 80. Put side, you'd want to sell the 80. Not very liquid though. For $128 stock, we got 19 million shares already traded today. It's cruel. It's a lot. So a lot of action on this one. Just you get liquidity. It's just slightly illiquid all the way up and down. Once you start getting to 80, liquidity gets a little bit better, but it's not great. From 80 all the way down, it's just too illiquid. All right. Tough. Really tough. Let's move on. Interesting, though. If liquidity comes into this one, which it probably won't, we'll sell the call side, but not yet. Pinterest, we're looking for 32.5. Still not there. No news, no downgrades, no nothing. And volatility's lower than the 30-day average, so we may take this one off the list. Yeah. At this point, you'd have to sell the 32 on the put side, and you only get 25 bucks. We're going to take Pinterest off the list. No more Pinterest follow-up. Next up, Alcoa, waiting for it to get to 25. I wonder if it got there yesterday. Nope. Never got there. It closed below this January 19th low, so that's interesting. It's going to come, maybe tomorrow will be another down day and get down to 25. Still have this big spike at the March expiration. So these are relatively expensive. If we can have a big down day tomorrow, we'll go in and sell maybe the 22.5. And this 22.5 strike is relatively a little expensive. So that's what I'm hoping for. Tomorrow, if we've got a big down day, we'll sell the 22.5. The 22.50 is right here. And that seems fair for March expiration. It'll be, yeah, we'll have to wait for tomorrow. Next up, the KRE. I think this mini banking crisis is over. Not as exciting as I thought it would be. Like I said, it got this bounce from back in September of 23. Moved back up. Now it's just hanging out here. If you want to sell the put side today, let's check it out. It's coming back in as far as volatility goes. You'd have to sell the 43 or 42. Fairly priced. This one's very fairly priced. There's no edge here. Call side's a mess. You'd have to sell the 52. You don't get paid for it though, so skip it. Next up, let's look at our list. We'll go to our Ivy rank scanner. We'll sort by volume. SPY was in the 40s yesterday. Now it's down to 28, so that's off the list. Nvidia's coming up. The Russell, Robinhood we looked at. AMD. We've already got our semi position. It's getting killed. Let's look at the SMH. sold the 200 and bought the 205, so half the spread's in the money. For March, we're right here, 200, 205, so our spread's right at the money. If you want to open something today, you'd want to sell the 220 and buy the 225. Liquidity's good on this one. 197. Let's see. The 19. Here we go. Hold on one second. 197 minus 70. Sorry, minus 125 divided by 2 divided by 500. 7.2% if you sold that call spread today. The one that I'm in. What am I trying to get? Trying to get 27. You get 36. So yeah, things have expanded. I was in too early on this one. When did we open this? We opened this on January 18th. Right here. That's okay. Could come back down. We'll see. We got some time. This is March expiration. We got 30 days. If it does pull back, it should get a bounce at 177. So if it does pull back, the next bounce may not be until 177, and at that point this trade will close. We just gotta wait and see. The thing can putter out. Alright, next up. Lyft we already looked at. Palantir, we've already got our position open. Uber, checked it out. ARM. Coinbase on the 15th. That's tomorrow after the close. Riot is up. Clean Spark. It's weird. No. Shopify. We already looked at that. PayPal. Let's take a look. PYPL. Nothing. Yeah, this one's done. Next. Citigroup, we already looked at. Taiwan Semi, we looked at that one yesterday. Let's pass. Bank of America, Barrick Gold. No, Instacart, we already looked at. Intel? Maybe they have earnings coming up. They have an event on February 21st. That's next week. The flagship Foundry event. Pat Gelsinger will speak. He will deliver a keynote and news that brings life to Intel's vision. Boy, wow. Exciting stuff. AMC, no. Eli Lilly on the 30th. Lilly's too big. Next up. Cisco tonight, right? Yeah, Cisco's tonight after the close. Walmart we got coming up. Micron. All these semis are way overextended. Block on the 22nd. Rivian on the 21st. It's next week. Pass on the KRE. We missed it. My bad. Oxy today after the close. SMH we just looked at. DraftKings. Well, that'll be tomorrow after the close. JetBlue. No. Ugh, Pfizer. Boeing. Still moving nowhere. MGM we already looked at. EDR, Endeavor. That's right. They were in the news the other day, right? 28th before the open. Too close. Celsius. Let's take a look. Heightened. That's for sure. Earnings then the 28th. We're too close. Let's move on. The GDX. some heightened volatility here. These are the gold miners. Alright, put side. May get a bounce here. Actually, you can catch a bounce anytime now. All the way down to 24 or so. So let's take a look on the put side. You'd have to sell the 24. That makes sense. This thing's perfectly priced. It's not bad. 24. Okay. It's the implied volatility is higher than the 38-day average. Okay, that looks nice. This one's 24 on the chart. 24 is right here. That seems fair. I'm going to sell one of these. Okay. So this will not be a spread just because it's an ETF. I'm going to sell the 24 March expiration. To make this cash secured, you need $2,400 in your account to make it cash secured, or you need level 3 or 4 options approval if you don't. Okay, so I'm going to sell one March expiration. The 24 strike on the put side will go for, I saw 27. I want 27. Preview this. Double check your ticket. Ooh, sorry. Getting comfortable. Sell one March 24 put, 27 limit to open, receive a credit of $27. We'll send that one out. Okay. This gets filled today. Set a buy to close at $13. All right. Next up, let's look at GLD really quick. Right at the average, so not a lot of heightened volatility here. Blah. Yeah, GDX is better. Moving on. What was GDX at? GDX is at 60 for the IV 30. IV rank 30. That seems interesting. Zillow. The 13th after the close. That was yesterday? I must have missed this one. My bad. Z, maybe it's illiquid. Yeah, too illiquid. You'd have to... Actually, it's not bad. Why? How did I miss this one? Yesterday after the close, RBC raises to outperform. Sorry, reiterates outperform, not a raise. Maintains 66. Must have missed this one. All right, here's our chart. Let's take a look. Resistance at 64.30. Didn't get there today. Let's already beat that one. 64.30. 63 to 64 is where there's be resistance. 63 to 64 call side. You need to sell the 65. That makes sense. Got a 9-cent spread here. That's not great. It's not bad. If you sold the 65 and bought the 70. So it's actually where you want it to be. The 65, you see it's green today, and the 70 is red. So that means the spread has widened out. So it means it's more, you'll get more return on it. 85 minus 33 divided by 2 divided by 500. Only 5% though. That's okay. Put side. You want to sell 50. Although it is post earnings and now volatility is lower than the average, which means this move wasn't more so than it was priced in. Slightly yes at the 65. It was probably priced for around an 8% move, and that's what it got. Okay. Next up. Craft Times. Coca-Cola. Is Coca-Cola still on this list? It shouldn't be. I think this is a mistake. Really quick, we'll know right away. Yeah, skip. JD, the K-Web. Devon. Applied Material will be tomorrow after the close. XBI. Those sons of guns. Trying to roll it. Sunrun. No thank you. A couple more, then we'll call it for today. Snowflake. Applied Materials. Unity on the 26th. Roku tomorrow after close. Roku will be a fun one. I like trading Roku. New York Community Bank. Still liquid. Still in business. QuantumScape. Marvell on the 7th. Twilio's today after the close. We'll follow up tomorrow. GE was in the news this morning. I can't remember why. Carvana we already looked at. Newmont on the 22nd. Hopefully for a big downward movement. Fastly. Today after the close on Fastly. We traded that one. Today after the close, all right. Almost done. Johnson Controls. We're getting to the bottom of the barrel here now. Avago. UNG. Arista was in the news this morning. I can't remember why. Salesforce. Wells Fargo. No. Pinduoduo. March 13th, no. Vertiv. Coming up next week. All right. GDX. Son of a gun. All right. If it gets filled, great. Set your buy to close. Limit debit, good till canceled at $13. Everything else, the rest of the portfolio is looking pretty grim today. But that's okay. We've got some time we got 30 days till March expiration. Trying to roll XBI. If it doesn't, we'll go over that on Friday when expiration happens, okay? Thanks so much for watching. Good questions from AKA. Good questions, good ideas on earnings, trading before earnings. But cool. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also, tell your friends who are trading to tune in as well. Like, subscribe, all that good stuff. And we'll see you all tomorrow morning.